Hey everyone, welcome back to Corporate Decoder. Today, DCOM just filed an 8K about a dividend, and I am seeing a familiar pattern for banks. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company announced a small preferred stock dividend, but the real story is what this filing tells us about their broader financial health and how it connects to their subordinated notes. Alright, let's dive into this filing from Dime Commercial Bankshares Incorporated. This is an 8K report, which tells us about important events that shareholders should know about. The key date here is the 23rd of July, 2026. This is when the company made its announcement. Now, what is really at play here is the company's stock. They have common stock, which is what most people think of when they talk about owning a piece of a company. They also have something called preferred stock, specifically Series A. Think of preferred stock as a hybrid between stocks and bonds. It usually pays a fixed dividend, but it doesn't come with the same voting rights as common stock. And very importantly, they have these 9.000% junior subordinated notes. These are essentially loans the company has taken out, but they are structured in a way that makes them subordinate to other debts. The 9% interest rate is quite significant, and it tells us something about the risk the company is taking on and the cost of borrowing. The main event reported here is about a dividend. It is not on their common stock, but on their series of preferred stock. They declared a quarterly cash dividend of 34.375 cents per S-share. This dividend will be paid out on the 14th of August to shareholders who own the stock by the 7th of August. This is a pretty standard announcement for preferred stock, and it's not usually a major market mover on its own. The actual details of this dividend announcement are in a press release, which is attached as an exhibit. The filing explicitly states this press release is being furnished, meaning it is for information and not officially filed in the same way as the main report. This section just lists what's included with the filing. The most important exhibit here is that press release we just mentioned. So what's the story here? This is a very routine announcement from Dime Commercial Bankshares about a preferred stock dividend. It's good to see they are meeting their obligations to preferred shareholders. However, what I'm really looking at is the context around the subordinated notes. The 9% interest rate on those notes is a key indicator. For a bank, maintaining a comfortable margin between what they earn on loans and what they pay in interest is crucial. Higher rates on their debt, like these subordinated notes, signal that the market perceives them as having a higher risk profile. When a bank files an 8K like this, especially one that focuses on a small dividend and points to external press releases, it's often about fulfilling a reporting requirement rather than announcing something earth-shattering. The real insight comes from considering this in light of their other financial instruments. The fact that they have these 9% subordinated notes outstanding means they are taking on significant debt obligations. We see news headlines from around the same time that mention Dime Commercial Bankshares setting a series of dividend, which aligns with this filing. There is also news about their 9.000% junior subordinated notes, suggesting that these notes are a significant part of their financial structure and something investors are tracking closely. Some reports even suggest the bank expects to resume share buybacks soon. While share buybacks can be a positive sign indicating management confidence and a desire to return capital to shareholders, it is important to weigh that against the cost of their debt. Think about it like this. If a company has to pay a high interest rate, like 9% on a portion of its borrowing, that takes a chunk out of potential profits that could otherwise go to common shareholders or be reinvested in the business. For banks, interest rate sensitivity is paramount. They borrow short-term and lend long-term. If their borrowing costs rise significantly, their profit margins get squeezed. This filing, while seemingly minor with its dividend announcement, is a reminder of the underlying debt structure. Companies like Dime Commercial Bankshares need to manage their cost of capital carefully. A 9% interest rate on junior subordinated notes is not trivial. It means that for every dollar of debt they have, they are committed to paying out a substantial amount in interest. This can be a drag on earnings and may limit their flexibility in tough economic times. So, while the dividend itself is straightforward, the context of the high interest subordinated debt is where the real story lies. It's a signal that the bank operates with a degree of financial leverage that requires careful management. The market is obviously aware of these notes, as evidenced by the news coverage. What I'd be watching for is how the bank's overall net interest margin holds up, and how they plan to manage or refinance this debt as it matures. The biggest concern here is the cost of their debt. Holding 9% in junior subordinated notes means their future profitability is tied to successfully managing interest rate spreads. If their lending portfolio doesn't generate enough to cover these interest costs and other operational expenses, it could put pressure on their ability to pay dividends and eventually on the common stock. Alright, that is our breakdown of Dime Commercial Bank Shares' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.